Welcome back. Welcome back. I wanted to share something, just actually doing a little personal video, but I'm going to record it for everyone's sake as well. Just working on something that's going to give myself and anyone who's interested in looking for sniper entries and just very accurate entries to gather the most pips, because that's what we're all about. We're trying to get the pips, we're trying to secure the bag, and we're trying to pay the bills. That's what this game is all about. And we're trying to do so with the lowest risk possible and be able to grow our accounts and be able to raise our lots and do all the things that we want to do. Pretty much plain and simple. So, and the way we do that was by learning methods and trying to apply those methods and principles that's going to give us the edge that we need in order to get the results that we're looking for. So, as most of you know, I use the quarter theory in reference to my support and resistance, my key level of areas, my zones, whatever lingo you want to use. This here, I will be adding to my quarters theory, support and resistance, but I believe that this is going to give me an even more accurate entry when it comes in reference to when price hits these levels and where it could possibly go. Because as you know, these are just zones. Even with Fibonacci, they're just zones. And so if I'm able to create a very accurate zone by doing this method here, and along with my quarters theory, I think my entries are going to be quite accurate and pinpointed. And so that's what I'm looking forward to doing. And I'm going to give credit to Kojo, who I've learned this method from. And I'm going to be trying to implement that this week. And I'm just really just putting this video together to sound it down within myself. And like I said, sharing is caring. So that's why I'm making a video about it and sharing it with everyone who's interested as well. So take a look at my chart. I am on the monthly time frame. Let's, before we start with these zones, you see this area here with this trend line going down and trend line going up. And so currently it's showing that, for me, my personal bias is that we currently are in an uptrend because we're making a higher high, we made a higher low, although we haven't continued with a higher high and higher low, which will give me a more of a confirmed bias that we are going to an uptrend. But we start to break previous highs here, 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 and here. So, and we made a high low right here. We've come back down. We made a lower high, but we've come back down and we've retested an area, and it is a higher low. Remember, in my previous videos, I mentioned that usually the move happens at the second higher low. So we have a possible scenario. But sometimes we're not really sure, and we're not really 100% sure what the market is going to do, but we just have a bias. And so what these trend lines here is going up and going down, what I consider this to be is the price being tracked. So price is being tracked between this trend line and this trend line here. And so really it's just a matter of whether or not price is going to do one of two things. It's either going to break this trend line, come down, retest, and then go up, or it's going to come down, break the trend line, retest, and then come down. That's really all it can do. Of course, it can consolidate in this area. It can do a bunch of things before it does one of the two things, but that is what we're waiting for. We're waiting for one of these two trend lines to be broken, and that will give us a confirmed bias as to whether we're going to continue downward or we're going to continue upward. So when you, for me personally, whenever I'm feeling as they look confused or hesitant or unsure, or whatever you want to use in reference to that, as to what price is going to do, trap the price and then let price tell you what it's going to do, because price is always going to tell you what it's going to do. But you want to give yourself an edge as to being able to see it clearly when it happens. And this is one of the best ways I have learned how to know what's going to happen and what my next step will be. So if price breaks this trend line here, my next step and what I'm looking for will be buys. If it breaks this trend line down here, what I will be looking for is sells. Of course, this is a monthly time frame, so all of this that's going to take place in here can take some time. It can take some time. It can just break out right now. We're in a new month, and then we'll know. Or if it starts to head down, we'll know. But that's that. Okay, so let's get down to my zones, my key levels, my support and resistance, supply and demand, whatever lingo you want to use in reference to that as well. um, Sorry, just drinking some coffee. This is quite interesting. So I'm on the monthly chart, and because it's a monthly chart, I'm looking at levels that's where price is currently. We don't want to really go too far back because this is like years ago, January 2013. So this is 20. So let's keep it real simple. This is the previous low on the monthly where price has come down and there was some rejection. It's at 114.353. You know that this is a good level because as we learned in some of the other videos that I have done, that we have a level of support here, we have a level of support here, and it has also acted as resistance as well. And knowing that you have a good level of support or resistance is when that level has been tested and as both support and resistance. And being that this is a monthly level, this is a very strong level, so that when price comes down to this level, you want to make sure that you clearly are paying attention to price action and what it's going to do. So I have my 114.353. This still is the quarters theory, but using a different set of numbers and how we get those numbers. And it's going to be applied to the standard quarters theory that I have. I'm going to show in a couple minutes. So from 114 to 353 will give me 124,369. This is 1,000 pips. And of course, you have your quarter points in between. And the reason why I have not haven't charted out here on the chart is because see, price has broken above this 124,369, and in the theory of the quarters theory, when price breaks above, it's usually going to the next quarter point at a minimum before it does anything. So since it has broken this 1,000 mark of 124,369, I'm looking for the next 1,000 point or 1,000 pips from here, and that would be 134,445. So from here, from 124,369, 1,000 pips is 134,445. Okay, and how I'm getting my midpoint is I'm dividing the level, which is the weekly level. I call it the weekly level. I'm dividing the level of the monthly resistance and the monthly support. But before I divide the level, I'm adding the two together. So I'm adding 134,445 plus 124,369. I get the number, and then I divide that number by 2, and it gives me the mid-range of 129,407. I don't want to make this complicated. I want to sound complicated. Oh, I got to use math or whatever. So let me just say this again slowly. When you find your 1,000 pips, you're going to try some accurate standpoint. You find your 1,000 pips on the monthly. So this is the 1,000 pips from the bottom 1,000 pips, but because price has broken above it, now I'm looking for the next subsequent 1,000 pips. Remember, price moves from support to resistance, from the ceiling, from the floor, from the train station to the train station. It's a train that's moving. It's going from one stop to the next. So since it has broken this level, this ceiling, and has retested it as the floor, it's looking for the next ceiling. In the quarters theory, we're doing that in 1,000 pip increments and then quarter points in between, so we can be able to enter the trade heading to the next stop, so to speak. Okay, so again, this 1,000 pip mark, 124,369, 1,000 pips from this one is 134,445. Okay, so then what we're going to do to find our 50% range of this is we're going to add the monthly support and the monthly resistance. And once we add it, we're going to get that number, and we're going to divide that by 2, and we're going to come up with 129,407. So that's our 50% mid-range. And look how accurate it actually is as well. Very accurate. So this is resistance. This is support. It's a support, And we also have resistance right here in this area, resistance. So this is an accurate level of resistance, support and resistance. Okay, so how do we find the two other subsequent quarter points? So we're trying to find the midpoint between the weekly level and the monthly resistance. So we'll do the same thing. We're going to add the 134445 and the 129407 and whatever number that is. Then we divide that by 2. We're going to get 131926. So to find the quarter mid level between the weekly level and the monthly support, we're going to add 124369 and 129407. We're going to divide that by 2 and we're going to get 126888. And look how accurate that is. That's accurate. So accurate. So you can actually use this as well without using the quarters theory, but I'm going to show you how to add this along with your quarters theory. And what you can do always up here, you can have two charts. And this is Oanda, so you can just have this monthly on your chart here, and then you have whatever chart you're using to actually trade or mark up. You can just write these numbers down and then go to that chart and implement those in along with your quarters theory or whatever. So that way, you don't have like charts all over the place and not understanding which one you're using and so forth and so on. Okay. So once price breaks above this 1,000 pip range here, I'm going to do the same thing. I'm going to find the next 1,000 pips and then get the quarter points and so forth and so on. So that way I don't have a whole bunch of lines all over my chart. And the reason why I have nothing in between here is because price has already broken this 1,000 pip mark. If price had came back in, I wouldn't have any of this here. I would have it all down here. So this is how I try to keep my chart nice and clean. So now I'm going to go back over to my main chart. So it's JPY, that's FXCM. So you see that I have it on my chart here. I have already added it on. So let's go down to a tradable time frame, which is 1 hour, 2 hour. Okay, so we have our standard quarters theory, right? The standard quarters theory is you find the low point or the highest high point, round number, and then you go from there. So really 1 to 400 would be, I don't have it down here because this is too low from price. 1 to 400 would be the round number, and then increments of 250. So it'll be 1 2 4 500, 1 2 4 250, 1 2 4 500, 1 2 4 750, then 1 2 5. Okay, so then you have 1 2 5 250, 1 2 5 500, 1 2 5 750. I don't have it all on my chart because right now presently we seem to be going up and down, so that's why I don't have it all here. But as you can see, I do have it from 1255, 125 750, 126, 126 250, 1265, 126 750, 127. That is the standard quarters theory, and it's easy to remember because it's quarters: 250, 500, 750 quarter point. My quarter points, the major quarter point levels are 127, 126, 125. These are the 1,000 pip increments, and in between them is the 250, the 5, and the 750. I usually mark them by different colors so that way I know that when I come to a particular color, let's say, for instance, black one, this is a major quarter point, and in the major quarter points, there are usually some type of chart pattern, something significant that happens there. Happens as well with the minor quarter points, but more so the major quarter points. So this is just what I use for my identifying purposes. But notice here, I've added the monthly new support and resistance levels that I just showed you from the other chart. So I added it here. So 124369 was the monthly support, right? So I put it here. And so what I have now is now an actual zone between the standard quarters theory as well as where price actually actually went. Because we know in the quarters theory, look at the quarter, like over here at 1255, you see that price always seems to come and breaks it a little. It always breaks it. There's wicks and it comes down and so forth. So it just doesn't always tap and just head back up because it's actually just a zone. So when I've added this level or this new, more accurate pricing of a zone to the quarters theory, look at what I have found. Let me just get that right there. Let me change this to, I like the color yellow. So you see, let's say for instance, price has actually come down. Here's the quarters point, 1245, and there goes the monthly level of support. It actually came down within the zone, traded in the zone, and then it broke out of it. And then price came right back down again and just wicked it. But it did pass the 1245, but it came into the zone. So this is a very accurate zone using the quarters theory. And it's interesting because the other way of calculating quarters theory from more of a just with what price has actually done instead of just a random standard 255, 750, actually using the actual price level that was used, which is 124369. So take a look up here. This monthly mid level, I believe I have it at. It's a mid level. Yeah, monthly mid level. Look at that. So here goes the major quarter point, 127.000, and here goes my 126888. And what did the price do? It came within the zone. So there you can get a much more accurate reading as to where price can go, will be going, because we know it's going to the quarter point. That's just a fact. And we also see that price actually reacts very strongly to these monthly levels. So, and they are very close to the standard quarters theory. So you have two, so technically we have two quarters theories working together to give you a much more accurate entry. So once we're getting close to, just so you notice that there's nothing in between as far as the 750 to 5 to 250, the mid levels. So it's giving you a nice good range between the levels. So once we see price heading down towards a major monthly situation, what you want to do is actually look for a subsequent quarter point and then draw your zone and then look left to see what price has done. So I think this is phenomenal. So we see that price actually came up into this area. It gave us some rejection 3 times, and then we have a bearish engulfing, and we could have taken this trade down. Let's see if I go to the 1 hour and see what we would have seen. Let's go down to 30 minutes and see what we would have seen. So we see a bearish engulfing. Even we go down to the 15 minutes. Let's see an entry. So we see just price action letting us know that it's definitely time for some type of reversal. So I mean, I think this is just a wonderful situation here where we can apply quarters theories 2.0. That's what I'm going to call it, quarter theory 2.0. Quarters theory 2.0 to get a more accurate zone and entry. And like I said, pay those bills, secure the bag. Let's get it. So if you have any questions, any comments, feel free to hit me up below. But I'm definitely going to be looking to apply this going further in my trading. So what we're looking at here, we've come down, we've retested. So quite interesting, quite interesting. Again, you don't want to have a whole bunch of lines on your chart, so you don't want to have a whole bunch of monthly levels. But you have one point to the next, and we know. Let's see, how many pips is it from one level to the next? Okay, so let's say you started down here and then up here. You look at minimum of 250 points, even further about 265 points. So from one level to the next, from the monthly mid level to the monthly support, you got at least 250 pips. So that's a lot of pips, and depending on your lot size, you can either pay your cell phone bill or put a down payment on the house. It's one or the other. But this will give you a better, some more confidence in taking the trades when we come down to this level. I mean, look at this. Look how far this has actually gone back into the zone. But I'm not going to make this video too long. So hopefully you've enjoyed it. Hit me up. And until next time, deuces.